Hello and welcome everyone. My name is Harsh Kwalani and we have Rahul other side, and we both are working as in UK accounting. And this is the first session of our series, Learn UK Accounting, where we would be decoding all the things regarding to UK accounting. We would see all those things practically. So, are we excited, Rahul?
Yes, we are excited.
Okay. So I would firstly tell you how we would go further ahead. So firstly, I would start with the theoretical portion, like what are those things that we would cover ahead. So we would be having basic work papers. We would be starting with Excel. We would not go directly to the advanced level. So firstly, let us understand. Let I will let you understand those basics. Okay. So this is the first time in YouTube where we are seeing such a content. So I would hope everybody likes it. Whether you are an ACCA student or whether you are thinking of starting your career in UK accounting, this video will surely help you. Okay, so it will also help you when you go for interviews. It would provide you edge because you know something additional, right? Instead of knowing some basics. Okay, so let us start. I would share my screen and just a second. Okay. Okay, Rahul. So is my screen visible, Rahul?
Yes, it's visible.
Okay. So there are firstly we are today going to talk about the cash book approach of finalizing accounts. So firstly, understand what are the different types of approach being used in UK accounting when we talk about finalizing those year-end reports. So first approach is where you normally have an opening TB and then you use a bookkeeping software like Xero, QuickBooks, Sage. Okay, so you put out all those transactions in that, like you post customer invoices, you post supplier invoices, and then you post necessary adjustment in it. And then what you do is we have finalization software like CCH, SAPA, right? So all those softwares are designed for finalizing accounts. We get our reports ready when we post out our bookkeeping TB in it, and then we post our final adjustment so that we get final report ready. But in the cash book approach, we don't have those hassle. We directly uh, record all those transactions from the bank transactions, the bank statements with the client have. We allocate those transactions, and on the basis of that, we finalize those accounts. Okay. So today we are going to deep dive into how that cash book approach works out. Okay. So let us start. So firstly, what do you mean by cash book approach? So a cash book is when we prepare accounts by starting directly. Okay, as I said, you start directly from take by taking bank transactions instead of using full bookkeeping records. Bookkeeping software, as I said, you have Xero, you have QuickBooks, you have Sage, mostly used in UK. Okay, so in this, if we talk about simply, we would talk about the detailed process ahead in this PPT and ahead in the Excel that Rahul is going to cover. So what we do is we take out all those bank transactions, we categorize them. So the transactions would be like I paid my rent through the bank, right? So we would classify those rent entries, those rent transactions, okay, into a specific code, and then we would allocate those costs there. Okay, I sold something, I got money, so that gets reflected onto my bank, and all those bank transactions would get affected. So after those things, okay, after allocating all the transaction, we would get our PNL and balance sheet report based on that. We put out necessary adjustment because in bank transaction, you would not find any depreciation entry or all like that. We have to post various adjustment entries. We have to build PNL and balance sheet because we are using accrual basis of accounting, not cash basis. So we would have to post depreciation entry. If we have any fixed asset, we have to post accrual and prepayment. Like say you have paid for something in advance that you are sir, you might you have gotten deferred income. You got income in advance. Okay, so you would be allocating those transactions over the period because we use accrual basis of accounting. although we are using the cash book approach. Okay. So uh, in short, it is building accounts just from the money in and out of the bank. Okay. And then posting necessary transaction. Okay. So now let's get ahead. Okay. So why do we use cashbook approach? As I talked, there is another approach also where we use a full-fledged bookkeeping software and then we use finalization software. But why use this? Okay. So firstly, it is fast and practical. Okay. You do not have to do full bookkeeping. Okay. It saves your time and it is a reliable starting point because our accounts can reflect wrong things, but bank records are always complete and accurate. It is ideal for cleanup and catch up work. Okay. So if your books are incomplete or messy, this method might be best for you. Okay. And another thing is it is really simple uh, as compared to the other method. It is cost effective also. When you take a bookkeeping software, you have to pay some subscription amount for that. But this cashbook approach can be easily performed in an Excel. You can easily do that and you can finalize your accounts. Okay. So this also saves your bookkeeping cost. Now, next, we move on to who uses the cash book approach. Okay, so mainly accountants who are working with sole traders and freelancer. So let's say my business is small, I am just starting out, so I do not have to spend much onto those softwares cost and other those things. Okay, so I would keep my records simple and easy. I would try to become cost effective in the starting. I do not have much budget to spend on those things. Okay, so it would also be necessary for it would also be prepared by firms handling bulk year-end jobs, okay, where speed and efficiency is a major thing. Junior accountants or trainee, when you start things out, okay, this is the easiest method to start with, okay, and this is why we have kept this topic because if you understand this, then again you would be able to understand those complex things that we do ahead in this series, okay. Now, next, what is the process? We would see this process practically ahead. But let us now understand how this process works. So we firstly take out those bank transaction, we download bank statement, and then we categorize each transaction. We would allocate payment, and bank receipt, and we would classify them into expense and income. And then we create ledgers based on that bank entries. We would adjust for all the non-cash items, as I told you earlier, depreciation, accruals, prepayment, all those things. We would reconcile those bank accounts, and at the end, we would build our final accounts. Okay. So this all you will understand when we go to the practical side. Okay. So this is enough of the theory. We want to get into the practical because you can't understand easily with this much of theory. So Rahul would cover out our practical portion. So are you ready, Rahul?
Yes, yes, I am.
Okay, so I am canceling my screen share. You can share now. Just a second. Okay, so Rahul is presenting us now.
Harsh, is my screen visible?
Yeah, you can continue.
Okay. So, guys, firstly, we have to look where to find all the information about company. So, here in front of you, there is a website of Companies House Beta, where you will be able to search any company, any limited company in the UK, and you will find all the information at a one site, which is HMRC. Okay. So, how does it look? See, here it is written that search the register. We will insert the company name in the search dialog box, and this will appear like this. Here I have created a demo form limited where you can see the company name written on it, and here it is the company number mentioned, company registered address, the company incorporation date, and regarding what next accounts made up to be, and also the nature of business. This will help how we will categorize our income and expenses by nature of business. Here, what it is: retail selling, non-specialized stores with food and beverages. So here you will get filing history, people, and more. We will not be going to in much detail about in company's house, but here in people section you will find all the director details, such as we have created the first director is Makija Rahul and Walan Harsh. Here date of birth and an appointed date is mentioned. So we will be showing you a demo client who is using cash basis, who just provide us only a bank statement, and we will finalize it and we will make trial balance from it, profit and loss statement for the year ended 31st March 25, and balance sheet also as at 31st March 2025. So you will get all the practical exposure regarding how manual job or cash box job is prepared in an outsourcing firm. So we do prepare always a client detail sheet, because while finalizing financial statements, all the details should be matched with HMRC. Okay. So here we have written Demo Firm Limited, which is for the year ended 31st March 2025. So incorporation date was 1st of April 2024, which is also mentioned here. So we have a full 12 months period. That is why we have used for the year ended. Otherwise, we would have used for the period ended. Here we have written the company's registered address and also the shareholdings. And you will see that here the shareholdings are already paid. Already paid does mean we will account shareholding through director's loan account. Now you will say, what is director loan account? We don't know what is director loan account. So director loan account is basically a thing in which all the transactions related to director will record. Whether director introduce a capital or take drawings, we record in that ledger, and that ledger is known as director's loan account, which is also necessary because company and director are a separate entity. Okay, so we will move forward ahead through bank statement, which is being provided by the client. What's our client name? Demo Firm Limited. And for which year end we are preparing it? 31st March 2025. So here is the bank statement of a client, which has mentioned the account number, the closing figure, and also the dates, particulars, money out, money in. So on 1st of March 2024, directors have introduced capital of £50,000, and later on has incurred so many expenses and also income also. Here are the total invoices of sales which we have made in the full year. And here are few assumptions we have taken. Yes, Ash, anything you want to mention?
Yes. So can you again show how you calculated those running balances? It might help everyone.
So running, yes, sure. So money in is like what is being credited in the bank, and money out is all the expenses. You can say it is debit of bank and it is credit of bank from bank's perspective. So running balance is calculated as first running balance plus money in minus money out. Got it? So here are also few assumptions we have taken, because if we would have done a full manual job, it would have taken a much longer video. So here the client is not a VAT registered and no payroll is being run. Our period, as I mentioned, it is from 1st of April 2024 to 31st March 2025. And it is also first year of accounts. So no opening balances. It is first year. Client is incorporated in 1st April 2024, and we have to account that for the first year only. So here are few expenses such as incorporation expenses, and the client have purchased equipment of £10,000, and there are O2 and charges. Charges are the bank charges, and O2 is a telephone and internet service provider in UK. So we will categorize this transaction accordingly. So for the manual job, as Harsh mentioned, that we need to categorize all the payments and receipts separately. So we will go ahead and here filter out all the payments first. So you can see these are the all payments during the year made, which is about 14,656 pound. And we have categorized this 14,656 pound, and we have categorized this into a particular accounting head, which is appropriate as per the nature of business. And where we would found the nature of business on the HMRC website by searching company name or company registered number. So here we have categorized the incorporation expense as other legal and professional fees, equipment as equipment addition, and O2 are the telephone internet charges. And apart from that, there are telephone and internet charges, there are bank charges, and there are drawings also. So where we would account drawings in the director loan account, because a company and director are a separate entity. So we will record that in a separate ledger to make sure it is not overdrawn. Okay. So we will move ahead. There are staff entertaining expenses and client entertaining expenses and a copy party, which is a substance part. So we have categorized this under travel and substances. After categorizing all the payments, we will move forward to the receipts. So at the bank statement, there was a invoice mentioned. There are total 3 invoices, means 3 sales of total 10,500 pounds. But at the receipt side, if we look at, there is firstly a capital introduced, which will be going to be in the director's loan account, as directors have introduced all the capital. And there are payments received from debtors, which are 5,000, 2,000, and 2,500, which is not equals to 10,500, which means there are still outstanding receivables. So we will make sure that we record this accurately, and all the outstanding debtors are being mentioned in our trial balance. Okay. Yes, Harsh.
So those total invoices made are most probably provided by client separately, right? Because we only have bank statement where we get cash in or cash out. So these are provided
Yes,
separately by
correct.
the client.
Yes, these are provided separately by the client, and we have, apart from that, a bank statement in which we will be finding by a description that from whom supply or from whom we have got the payment. Okay.
Okay. Okay.
So after categorizing sales bank receipt analysis, we have categorized capital introduced and director loan account. And apart from that, there are only sales made payment. So we have categorized that into sales. Okay. Now, the journal adjustment is a basic part. So we will not deep dive into it and just post all the bank receipts and payment transaction journal adjustment. So here, likewise, we have posted through a bank, which is a business current account. But sometimes what happens is the director are previously sole trader. So they took transaction from only the personal bank account, and they provide the details that we have done the transaction from personal banks. So at that time, we will record. Yes, sir.
So can you also mention what are those codes you have written out?
What are the?
What are those codes that you have written out in the left hand side, that those 570, 550? So they
Yes,
could get
yes.
some idea about that.
So here's the chart of account. You will get every software chart of account differently. We have made also differently, as we haven't used any software like Xero or finalization software such as Iris Elements, Text Calci. There are many, but for now, we will show you how this works in Excel. This is not mandatory regarding the chart of account. You can take any, and just which is essential is the particular tab and the category of the particulars. Got it, Harsh? So we will move ahead to adjustment journals, which we have posted. So through chart of account, we have looked at the bank code is 570, trade debtors code is 550, the director's loan account is 600, and one is for sales. So we have accordingly posted the bank receipt analysis by mentioning in mind that there are also trade debtors. So for now, we have booked all the cells as per the invoice only. Later on, we have recorded here a debtor adjustment, and by which trade debtors comes to here 1,000 as outstanding. We'll talk this in detail also. Firstly, look at all the adjustment journals which we have posted for the bank only. So for firstly, we have posted the bank receipt analysis, then bank payments analysis. Only and only we have posted accordingly. We have categorized in the previous steps of bank receipts and bank payments. Later on, by posting all this adjustment, we have here the trial balance. All the debit adjustments is being shown here. All the credit is being shown here, and this is the trial balance for the year ended 31st March 2025, which is total being zero. So always the trial balance total is zero. So we will move ahead by particularly a fixed lead schedule of fixed assets, bank, trade debtors, DLA, and then we will move forward towards how balance sheet is being prepared, how profit and loss statement look. Okay. So there was a 10,000 addition of equipment here. So we have recorded this as an addition, and we have charged depreciation as per the accounting policy, which is 20%. Okay. So now bank. Now we have linked bank to the trial balance. If you look at the closing figure, here it comes to 44,844. And if we move ahead with the bank statement, it is also closing figure comes to 44,844. By which we can confirm that we have recorded all the bank payments and receipts accurately. Okay. So we have come equipment NBV as 8,000 pound. Bank statement closing figure is accurate, as we have also cross-checked with a bank statement also, which is the Barclays bank statement. Now comes to trade debtors. How we calculated that there are still 1,000 outstanding. So there were 3 transactions related to sales are made and receipts, which we have taken from the bank statement only. We have recorded all the sales made as per the invoice first. Then payment received against invoices. Then outstanding by deducting total sales minus payment received. So here it comes to 1,000 are trade debtors made. Now for cross check whether we have posted the adjustment journal correctly or not, we will recheck with the trial balance. So here, if you look at trade debtors, it is 1,000 closing. So this is also accurate. Now moving forward to director's loan account. So there was no opening balance, as this is the first year, as we have already mentioned. There was a 50,000 capital introduced, which is being categorized under DLA on the protect side. And there was a drawings made by Hirsch in the bank statement. So there are 2 directors named, one is Rahul Makija and second is Hirsch Walani. So there are drawings made by Hirsch, and here we have issued share capital through DLA. If this was not paid, we would have accounted this through other debtors instead of director's loan account. This is a crucial part which you need to remember. So here our DLA closing balance comes to 47,998 pounds, and we have put in a trial balance check also here. So to agree the balance as per the trial balance, here it is 47,998 credit balance as per a director loan account. Now moving forward to all the essential parts of statements such as balance sheet and profit and loss statement. Firstly, we will look how the P&L is being made through the trial balance. So here are the sales made. Here are all expenses, including non-cash expenses also. So here it is profit for the year, which is profit before tax. We will talk later about corporation tax and how tax planning works and what are the disallowed expenses and allowable expenses, which we'll talk this later on. First, we understand how we arrive at a profit before tax for the year. So we recognized all the revenue or receipts and the statement of profit and loss for year ended 31st March 2025 and deducted all expenses incurred, which we have categorized and posted the journals and their closing balance. So it comes to a profit before tax for the year. Now moving forward to balance sheet. Here it comes balance sheet. There are we always mention NBV of fixed assets. By addition, we have also posted depreciation also in the year, which is a full year depreciation. So there is a depreciation of 2000. There was a depreciation of £2,000, and here it comes to NBV of 8,000. The fixed assets will comes to 8,000, and there are current assets, and current assets includes the bank and the trade data. Bank is also a part of current asset, and trade data are also a part of current asset. Okay. So here it comes to our total assets. Now we talk of if current liabilities, there are only a single liability in this case, which is DLA, director loan account. And what's our director loan account balance, closing balance? £48,998. And we have also rechecked this with the trial balance. So here it comes to current liabilities. Now, at last, we have mentioned capital and reserve. So, capital and reserve are here, profit for the year. Which is, in this case, it is profit for the year. If it is a second year or third year, it will be retained earnings, which will include profit brought forward also and share capital. So from 11th to 12th classes, we have studied that balance sheet should be tallied. So here, as a balance sheet tallied, we are so happy. So if we cross-check this balance of capital and reserve, we can see that the profit before tax is 5,844 plus share capital of £2, which we have recorded here. So balance sheet total comes to 5,844 5,844 plus £2 of share capital. So it does agree with a adjustment journal posting. So we have made all the things which does client require except corporation taxation. So we have made the profit and loss statement, trial balance for the period for the year ended 31st March 2025, and the balance sheet also. And that's it what client requires. It was such an easy task, but in real life, it is not as easy you think. It does include accruals, prepayments, tax planning, payroll reconciliation, VAT reconciliation, which we will be talk later as per your comment in the video about what topics you need to have us to explain you in this simpler language, which will help in your interviews at outsourcing firms or other KPOs. Wherever you want to make interview, it will definitely add value. What do you think, Harsh?
Yeah, truly. And thank you for this wonderful explanation. I hope everybody would have understood it. And this is some of the simple things, as Rahul said, we have covered today. And we have many more things to do ahead. So, as he said, you should mention whatever additional thing that you want from us. I think we are planning mostly corporation tax for the next session. But any other thing that you need, you can comment. And I would also hope that you like the video, and you should subscribe our channel so that you get updates whenever we post such type of such type of insightful content. Okay, and yeah, that is it. And any other thing you would like to
Okay.
add on?
No such other thing I would like to add on. Just do comment down below, guys. And as per the response, we will also get the motivated from the
Yeah.
comments and the likes. So we will try to make more simpler topics and the complex topic as well.
And also, if you have any further doubts in this also, you can also ask us in the comment box. We are always ready to help you. Okay.
And you can join our WhatsApp group, which is mentioned in the description below. And from there, you will get this Excel sheet also.
Yeah, we also have a LinkedIn channel also, where you could follow us, so you get regular updates. And yeah, this was all the self promotion, and hope you liked the video. And let's come back to another video. Thank you, Rahul, and thank you, everyone.
Thank you.